Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Peter McGuire, CEO at XM Australia, joining. And Peter, welcome to the show. And, greetings for the festival season that we are seeing here in India as well. My first question, Peter, coming to you is taking the entire scenario into consideration with what happened with COVID. Since then, we've seen a good rally that has come in with regards to global markets as a whole. What do you make of the kind of up moves and corrections that we are seeing? Because clearly, if you go to see, a lot was dependent on what the Fed's stance would be with regards to where tapering goes. How are you seeing the entire scenario now?
Well, Hiral, and it's lovely to join you from Sydney, Australia. And again, thank you very much for the invitation and wonderful. Wishing everyone a very happy Diwali. I'm a little bit belated, but anyway, our sentiments and joys are with you all and blessings. We've had an enormous move to the upside, as everyone's mindful of, over the last 16 or 17 months from that massive sell-off, Hiral. And what we've experienced has been pretty much one-way traffic across a lot of the global equity markets. I made reference to the Dow Jones, S&P and NASDAQ over the last matter of days, how the strong move to the upside and that US dollar index. Now, we've seen a dramatic push upwards as far as crude oil and energy. Put our minds back 16 or so months and we had negative $40 a barrel. I laugh because you just can't believe that someone would pay you $40 to take a barrel of oil. And now we're sitting at the best part of $82 or $83. So all of those moving parts together, and you mentioned as far as taper, last week, I think, really hit everyone between the eyes, Hiral. It was an underperformance week as far as central banks and their mood as far as raising of rates or taper to get the ball rolling. And then we capped that off Friday evening with that better than expected non-farm payroll number of about 531,000.
Right. So overall, Peter, when you're talking about the various central banks, say from the Fed to the ECB to Bank of England, all of them have pushed back on aggressive rate hike expectations. And that's what the markets are looking at right now. However, do you see the scenario changing?
While they've pushed back as far as a timeline or when to introduce, but we've got to be mindful that there are some central banks across the world that have actually raised rates. Deal with them, about 5 or 6 of them. But the other side we've got, and I'd be interested to get your thoughts on this as far as the transitory inflation gauge, and everyone's saying it's not going to be that long-lived, and I think that could be the great surprise of 22. Inflation, certainly in Australia with the current cost as far as energy prices, we've got very much higher food prices. Base metals certainly rallied strongly to the upside, and anyone doing any form of home renovation or work with stud lumber, copper, lead, zinc, aluminium, tin, anything that goes into a home is paying a lot higher than they were a year ago. So that inflation across all of those inputs and the cost of transporting goods. So that's why I'm thinking I'm really layering that up to give our viewers an appreciation. The man and woman on the street is really feeling it in their wallet and purse as far as their spending power. And that's, I think, going to be a great concern to every central or majority of central bankers going forward.
Right. So overall, if you have to see the next set of data points that is expected is with regards to where the US inflation numbers go, what's the sense that you pick up on that front? And what's the impact that we could see on the markets, especially on the US dollar?
Okay, I want to see where we've got a number coming out Friday, and I'm, holding the wheel tightly and seeing where we run with that, because I feel as though that could surprise the market a little. And there's the concern, once that really starts to ratchet up and gallop away, it's hard to contain. The only way traditionally you contain a market in the sense of an inflation market or inflationary spike is to ratchet up interest rates. So there's the first part. The second part is you've got some markets, look at the ECB and look at Eurozone. I'm not saying it's slowed down to a dawdle, but it's certainly slowing their whole GDP and their whole growth forecast if you look at the PMIs. So that's a concern. And I think for all the viewers to do a little bit of homework to do, go and read up about inflation and go and read up about stagflation. Your role and my role here today, Hiral, is not to discuss or to lecture anyone or teach them about what stagflation means, but the intricacies of that market and how that traditionally in an inflationary time you raise interest rates, but in a stagflation time, the last thing you want to do is raise rates because you've got suppressed growth. So there's the issue that we face with all of that stimulus that's been piled in to the best part of, I don't know, 10 trillion, pick a number. So we're paying for our sins as far as that global central banks COVID storyline. And I think there could be some hurt eventually felt to a large sector of the market.
Right. So what direction are you expecting the dollar index to take from here on?
It was running at about 94.6 this morning, and we had a high of 94.62. I think I spoke a little while back, it was about 94.22. I'll have a look in a second. It's choppy. I've seen a nice move in gold over the last trading session, up about $24, $25. So there's the story there, and that's underpinned gold. I'm curious to see what happens as far as that inflationary number coming out, or inflation number later in the week, and maybe that US dollar index is going to creep higher. There's the storyline. I feel that we're at 94. Remember, it wasn't that long ago we had a peak of 103, collapsed to 89, and back at 94 now, so it's mid-range. Probably there's the potential to take a 95 handle out. When people say handle to all the viewers, that means the number, like 95 US dollar index.
Right. And in turn, what's the impact that you see, especially with regards to where the European currencies go?
Well, I'm just looking at that US dollar index for us while we're here, 94.28. Where's the euro? Well, the euro's been hit. There's the story there. It's been hit, and pound was hit. So they've had big sell-offs, and we could see a little bit further move to the upside, as we mentioned, as far as US dollar, and that would traditionally see a softer euro and a softer pound. And when you're looking at it, pardon me, when you're looking at a chart, Hiral, and you're seeing what those dynamic moves are, it wasn't that long ago that we were, chopping at the bit saying it's a 122 euro. Oh, wow. And all of those sort of the excitement behind it, many of the traders were saying. Now you're sitting that 115, 116 sort of range. And the pound was a chance you could have broken a 140. Now you're sitting at a 134. So that demonstrates, I think, to everyone, and I'll just get those currencies up so I can see. You've got 115.62, and we've got the pound sitting at that 134.83 handle. US dollar yen also, they're incredibly volatile, the currency markets. And that truly is an indication, because not like an equity market that it opens and it closes. In Australia, it's 10 a.m. to 4 p.m. Then at 4 p.m. over, see you tomorrow morning at 10 a.m. If you're trading currency markets, Hiral, as we know, 24 hours a day, doesn't start, doesn't stop. Starts on Monday morning in Auckland, finishes on Saturday morning or Friday night in New York, sort of thing. It's just that continuation over a big window of time.
Right. And with all of this, with the way currency markets are moving, with the way what the central banks are doing, what's the kind of impact we see, especially in terms of where the debt market, the bond yields are concerned?
Well, bond yields are a worry, because if you're not going to raise rates, you can see them. First off, what's happening, I think, before we go to bond markets, what's happening as far as central banks? What's the viewpoint? Are they able to raise rates? I think last week was a little bit of a wake-up call for a lot of people to say, are we going to see a higher bond rate rises? What impact's that going to have to markets? And everyone seems to have gone, oh, hang on a second, we won't move yet. So naturally, it'll impact bond prices, and they were in some point baked in. So when something's baked into the market, you've been in the markets long enough, Hiral, all the good news is baked into the storyline. And then all of a sudden that doesn't deliver, so it impacts price. So I'm sitting here, you'll never go rich, you'll never get rich putting money in the bank at the moment. If you look at US rates and you look at Euro rates, or Japan, you give me $100 and I give you back $99.8. So you're getting negative interest rates. So there's the situation across many of those mature economies. I'm curious to see how that bond story plays out. The first story, I think, has got to be, where does inflation play? I'm curious to see that. Then we'll see where bond prices go.
Okay. And then with all of this, we're talking about the economy as a whole. What's the sense that you pick up with crude especially? Because we did see a good up move that did come in. Now we are seeing some bit of a cooling off that's happening in terms of crude. So do you think this is the direction, or this is just a short-term cool off and then we're going to see a bounce back once again?
I think two things. First off, it's been a monstrous move to the upside, a 40%, price hike. I haven't got a graph here to see me over the timeline, but it's probably been over the last 10 to 12 weeks. So it's been an enormous move over that Northern Hemisphere summer. Second point, demand is outstripping everyone's, I think, interpretation as far as what they would have forecast. And as flights are opening up and as sea travel, as cruise liners, as transportation, everything in the demand picture is increasing, then you're going to see far greater demand globally for crude. So there's the second point. Third point, if you're a producer, you would be rubbing your hands going, how good is this? I mean, it really is, when we're seeing what it was like this time last year with a different administration in the States, and I'm not here to talk a political side, but how much cheaper crude was and how much better it was for the economy. And now you're playing, unless you're an oil producer, and now everyone's paying higher prices. How much higher is it today than it was this time last year for crude on the streets of Mumbai?
Okay.
how much more expensive is it, Hiral?
Right now, crude, you wouldn't believe we'd crossed 150. Petrol had crossed 115.
Wow. And what was it this time last year?
I don't think so. We were anywhere above. We were somewhere, say, 80, 85, 90, not beyond.
Okay. So you're nearly 50% up. And so that 50%, this is what I'm getting at. This is the inflation line. This is the story that you say, I'm going to the market and I have to buy those goods or I have to buy whatever. They've got to be transported from the farmlands of India down to Mumbai. It's a beautiful big city, Mumbai, but it's dynamic. But a lot of things need to be shipped in, don't they? By truck or train or vegetables, fruits, all of those goods. So you pay more for them. And this is the issue. This is the inflationary side that's going to be felt very much across certainly the subcontinent, certainly emerging markets. And what impact is that going to have to global growth? That's the question.
Okay. So very lastly, Peter, in terms of the way crude moves from here on, what are the key factors that one should be watching out for according to you?
I'm just looking here. We were at May, end of May, we're at around $60. So it's been 5 months or 4 months bullish to the upside. Many analysts are now saying that we're going to see a $90 handle and may see 100. There are large degree, and they're the big banks. I mean, I'm not talking out of school here. I'm talking, the largest banks in the world are forecasting that $100 handle. Then you've got analysts that are technical traders and very, very accomplished traders, global guys that are hedge fund guys, saying their forecast is 121. So what hurt is that going to be to the market? Imagine you're saying 115, you're feeling for petrol in Mumbai. Imagine if it goes to 150. Could happen, couldn't it? But that's going to greatly impact. So it's really impacting everyone at the moment.
Peter, but the moment crude goes to 150, I think there'll be riots in the country.
Well, this is the issue globally, because everything is mapped through to inflation. And you're not seeing, if you're getting wage rises and your wages are going up 100%, then, well, that's not going to be a good thing either, because no one's going to be able to afford you. But the other side is you don't seem to get very high wage rises, but all your cost of living is going up. And that's a great concern to anyone that is involved in, running a home or running their own budget, let alone a country.
Right. And overall, anything, Peter, with regards to what's happening in China as well that could impact the commodity market as a whole?
I'm concerned still about how Evergrande plays out and certainly the property sector, because it accounts for 30% of the market. My understanding is they've got 90 million apartments as far as that no one's living in. So that's excess inventory. My also understanding is that how that washes through the domestic economy and how do you clean inventory out? Are there fire sales, and how does that affect the retail sector? So I think that's where a lot of eyes are looking at, domestically what's happening. And then you've got naturally the international banks and international financial institutions that have funded a lot of this in China, and what's their risk appetite going to be moving forward into 22 and 23 and 24, and the overall demand picture for housing, construction, because it accounts, as we said, 30% of the GDP of China is property. Then to put it in a simplistic number, their property sector is worth about approximately $62 trillion. So it's far greater than any other market in the world. It's the biggest asset valued market, stock market, commodities, you name it. The Chinese property market is a monster.
Absolutely. And that's something we should be watching out for as well.
So when you're saying that, what's to worry about? I'm giving everyone an overview as far as the severity, how big how big the market is. Everyone needs to do their own research. And you need to, and information is no weight to carry. I mean, go and get unfortunately, only comes out once a week in Australia, the Financial Times. But go and get an international newspaper. I mean, you've got the best newspapers in the world and some of the best journalists in the world in Mumbai.
Absolutely.
So, business news. So go and read the newspapers, go and digest the information, watch the business news channels, and appreciate and learn. And it doesn't matter, what you do for a job. Information and knowledge is no weight to carry. And some of the most high-profile CEOs in the globe, or on the global stage, as far as global corporations, are Indian.
Absolutely.
There you go.
Yeah, I mean, that's the best, as you're suggesting as well. Yeah, absolutely. What you're saying is absolutely so much sense that's something that everyone needs to do their own bit of research as well.
Yeah.
Well, thank you. In fact,
it doesn't hurt, Hiral. That's the knowledge base that, to find out. We talk to our clients. We run a very big operation, and we've got clients across the globe. So your breakfast time is someone else's dinner time, sort of thing. Understand. People say, well, I don't know where to start. Where you start is get a newspaper. Where you start is sit down and devote 20 minutes to reading. And as well as I do, I was listening to something from Arnold Schwarzenegger over the weekend, motivational. And it was to do with don't listen to the naysayers. In other words, the people that say you can't do that. Well, I'm a huge believer. That's why I love India, because I go to India and I say that from my heart. I truly mean it. You know how many times I've been there, like 15 times, 20 times. And I come and see everyone, and I just love the energy. And the young people, they're all reading, they're all digesting information. And that's what you've got to do. If you want to understand these markets, listen, learn, and devote some time. And as Schwarzenegger said, find it something you're interested in and read an hour a day. After a year, you've got 365 hours of information. I'll tell you what, you'll know a lot of stuff about something.
Absolutely. I think it's an important aspect that you've shown us, Peter. Thank you so much for joining us on the show. Always a pleasure to speak to you. Thank you. Stay safe and see you soon in Mumbai.
I hope to, Hiral, and God bless you and God bless everyone. So thank you.
Thank you so much. Bye-bye.
See you. Bye.